Hey folks, happy Friday. Tony here from Rebel Financial. So what I want to do today, since we're a little bit now into tax season, not too far into it, but I thought I would give a little information on filing taxes and what you need to be thinking about. The first thing I want to say is, because I find this amusing, is whether or not you have to file. And so you do have to, by the way, and we've been filing since 1861. But the IRS has a very good article here, the truth about frivolous tax arguments. So when you do get into that conversation with somebody who thinks they don't have to file, here's some good information to talk about the fact that you do have to file. So don't think there's some way out of it. Don't do a bunch of research. You'll end up in jail, if you don't pay your taxes. So I just find this interesting. And there's always somebody coming along thinking they've got a way around this. There is none. And you could read about it here. So anyway, so that's a little bit about that. So we've been filing now since February 12th. Of course, the deadline is going to be in the middle of April. There is talk that can be moved, like it was last year in 2020 for the 2019 season. But it is not likely. Many don't want to move it, don't want to get into the habit of doing this. And so don't count on that. So chances are assume that in the middle of April, as always, the taxes are going to be due. So if you are somebody, though, who doesn't make it by then, of course, you can file an extension. A lot of misconceptions with an extension. People just think, oh, I'm just going to send in this letter and that's it. When you extend your taxes till October 15th, the only thing you're doing is extending the actual return. You have to pay by April, okay? By the tax deadline, the original one. You don't get to extend when you owe. So figure out about what you owe and send that in. And make sure that it's really close to what you think you're going to owe. Otherwise, you could get penalties and there'll be some interest tacked on. So the other thing, what we've seen the last couple of years is withholdings have been pulled back a little bit. It's kind of a trick to juice the economy up by the government. So you have to be careful and make sure that on an ongoing basis, you are paying near what you owe, because I have seen more people having penalties when they go to file taxes, because of this. Through no doing of their own, their withholdings have changed, and lo and behold, they owe a good amount. So be on top of that. And when you do find out you owe a lot, just have your withholdings adjusted back to where they should be, because your taxes should be pretty consistent. So anyway, a little bit about that. Some of the things I've seen already this year, probably the biggest change this year is the economic impact checks that we got. And some people didn't get them and some people didn't get enough. So what that was a credit that was forwarded to you, if you did get it. If you didn't get it and you think you should have, you have recourse. And what you will do, there's a recovery rebate credit on the taxes. So when you file it, you want to make sure you either put in how much you received back in the spring of 2020, then at the beginning of 2021. The top would have been $1,200 per person back in the spring, and then $600 back in January. So if you didn't, you should put those numbers in anyway. But whatever amount you received or didn't receive, put that number in there. So if you didn't receive it, this is your chance to recoup it if you are owed it, if you're within those income limits. So make sure you take a look at that. But no matter what, bring that to your tax preparer and make sure that you have those things. Another opportunity that I think people often miss, married couples, is they default to filing jointly, married filing jointly. But there is an opportunity, and it is worthwhile into looking into married filing separately. Typically, where you benefit is you will owe more if you do this to the federal government, but you'll have even more money coming back to you from the state government. So you want to look at both sides and make sure that what you're doing jointly makes more sense. Where I see it working more often is where you have two incomes and they're somewhat the same. And that way the state somehow will reward you more than the federal government will punish you. But I do have some warnings for you. When you file separately, you will miss out on some things, like your limits for contributing to the Roth. Your income limits are much lower. You will miss out on some credits. And so you have to be cognizant of that. So if you're somebody, not the child tax credit, that one, it will phase out kind of, it's $400 if you're married filing jointly, $200 each if you're married filing separately. So you have to just be careful of any credits you're getting, and you will see that they can phase out. Specifically, the ones that come to mind are like the education credits, but really more credits phase out than don't when you're married filing separately. So you want to look at it, see if it's an opportunity, but just be cognizant of the traps there. Okay. A lot of people as well ask me, what do we do with our tax returns? So you only really need to keep them for 3 years. The only time the IRS is going to tell you you need to keep them longer than that is if they're going to accuse you of fraud, in which case then they have 7 years to come back on you and look for things. So make sure you're keeping those when you can, but you don't need to keep them forever. Okay, so keep an eye out for that. Another big area where I see people falling prey to mistakes is when they move, they are not in tune to local taxes. All right. I am from Chicago. Chicago taxes a lot, but they don't have, at least they didn't when I moved, local taxes. And so when I moved here to Columbus, Ohio, I went a couple of years without paying the local taxes. And it was to my surprise that the local agency came at me a few years later and said, hey, where is our money? And more than that, then I had to go back before I even moved here and prove then I didn't live here and such. So no matter where you move, especially in Central Ohio, but this goes for anywhere, you really want to know not only the local city taxes, but the school district taxes, because sometimes you can have both and they're independent of each other. I mean, oftentimes you'll have one or the other, but you need to be cognizant of that. So make sure you're filing correctly for where you live. I know here in Central Ohio, it can be pretty cumbersome and a little tricky. So anyway, those are some of the things I'm seeing now. Any questions you have, I'm always happy to answer those the best we can. So you can put it in the comments below, or you can simply just reach out to us. You can find us below in rebelfinancial.com. We'll have that information. But just make sure you file your taxes, do it timely. And if you have any questions, don't risk. The IRS is really right now skimmed down like a lot of federal agencies and personnel, and they were really behind on things. So do the best you can to do it right and do it the first time. And if you need a tax preparer, reach out to one. Okay. Thanks. Happy Friday, and we'll talk to you soon.